move mean? Does it mean they're getting ready for a major banking crisis?
Yeah, a major banking crisis, because no longer is cash the risk-free asset. They're using treasuries, which the US dollar is down 10% year to date, 6 months into the year. Guess what happened yesterday?
Well, you've been saying for over a year on the show that it was going to be a banking liquidity crisis. And so every time this happens, it means we're here. So what's the time frame?
Now, as of this morning, actually, the news came out that Wells Fargo had to borrow $200 billion in just the first quarter of this year to stave off illiquidity, right? $200 billion in just the first quarter. And now the bank stocks are starting to come tumbling down, as you can see on the screen there. It's like, okay, this is a problem. The banks are going to get hard. Why are they going to get hard? Because they're running out of liquidity. Oh, no wonder they're allowing U.S. Treasuries to be the safe haven, even though they're not so safe, to protect their toxic assets. Alex, banks are about to kind of start unwinding, but these are big banks. Wells Fargo isn't small. Like Silicon Valley Bank, First Republic, Signature Bank, Credit Suisse, when they went under, those were regional banks. We're talking about a complete banking system failure.
In New York and on Wall Street is banking regulation. Let's talk about the supplemental leverage ratio, which seems like an obscure thing off to the side, but it has been the subject of much discussion. And it does, as I understand it, relate to U.S. Treasuries and yields on U.S. Treasuries, so that if major banks held more U.S. Treasuries, it would bring yields down. You've said you're going to take more of an active role, as I understand it, with respect to some of that banking regulation. Where are we with that?
I think we are very close to moving the supplementary leverage ratio, SLR. That is moving along very quickly between the three banking regulators, the Fed, the OCC, and the FDIC. So I would think we could see something on that over the summer.
Over the summer, and knowing the markets as you do, would you anticipate that might have a significant material effect on Treasury yields?
Well, I think it could, because banks are being penalized for holding treasuries. You know, there's a large supplementary leverage charge. So I think for holding the risk-free asset, we can reduce that. And, you know, I've seen estimates that it could bring yields down by tens of basis points. Certainly during the COVID crisis, it was the temporarily taken off, and it had a big effect.
So why is this important? What does this really mean to the overall recovery we're trying to get done here?
Okay, so when you look back to 2008, 2009, everybody remembers what happened then. Stock markets collapsed 50%. The Dow came down 50, S&P 500 came down 50%. It took people 5 years just to break even from that, right? So what happens prior to that, when we start heading into a banking crisis, Alex, banks start moving from investing into long-term bonds, which have a higher yield, to shorter-term notes, which are like 5 to 10 years, right, in that range. Well, then, right before a banking crisis happens, they move to T-bills, which are like 1 year or less duration, right? So what are they doing? They're sacrificing yield on long-term bonds to have something that can be immediately ditched, right? They have to have something that they can immediately get rid of. So when we look at what caused 2008, 2009, it was too much liquidity in the banks, right? This is where I think Jerome Powell is crazy, right? Because he's going back to the well of we're going to have this supplementary leverage ratio that we put into place after 2008, 2009 to have cash be the risk-free asset that actually protects and hedges as a reserve.
And that's why Warren Buffett is in the biggest cash position ever.
Yes. Yeah. So they kind of fixed sort of the 2008, 2009 crisis with a Band-Aid, saying you've got to have reserves in cash to protect against your toxic assets, all the subprime lending. So what happens when banks have too much liquidity? they start doling it out, right? They start giving people loans who can't pay back their loans. This is what caused the subprime lending crisis.
Here's the bottom line. What's this move mean? Does it mean they're getting ready for a major banking crisis?
Yeah, a major banking crisis, because no longer is cash the risk-free asset. They're using treasuries, which the US dollar is down 10% year to date, 6 months into the year. Don't tell me that losing 10% in 6 months is a risk-free asset. So they're saying you can use the dollar, which the BRICS nations are trying to destroy, to actually hedge your toxic assets. It's using like one bad asset to protect another one. So this is what Jerome Powell is wanting to do, right? So when you do this, you add all this money, all these treasuries in there, when the rest of the world doesn't want it, he's going to say, this is going to cause inflation. We have to raise interest rates to stop this, right? But so this is the battle that Trump and Jerome Powell are having. So when banks go into short-term T-bills, it signifies a crisis, a liquidity crisis at the banks. This is what we talked about last week with Owen. Guess what happened?
Well, you've been saying for over a year on the show that it was going to be a banking liquidity crisis, and so every time this happens, it means we're here. So what's the time frame?
Now, as of this morning, actually, the news came out that Wells Fargo had to borrow $200 billion in just the first quarter of this year to stave off illiquidity, right? $200 billion in just the first quarter. And now the bank stocks are starting to come tumbling down, as you can see on the screen there. It's like, okay, this is a problem. The banks are going to get hard. Why are they going to get hard? Because they're running out of liquidity. Oh, no wonder they're allowing U.S. treasuries to be the safe haven, even though they're not so safe, to protect their toxic assets. Alex, banks are about to kind of start unwinding, but these are big banks. Wells Fargo isn't small. Like Silicon Valley Bank, First Republic, Signature Bank, Credit Suisse, when they went under, those are regional banks. We're talking about a complete banking system failure when they have to change the rules of supplementary leverage ratios and say, yeah.
Wait, so talk to me like I'm 5 years old, Dr. Elliott. Spell it out. Or you're saying there's the major banking crisis you've been predicting. You were probably saying regional banks first, but now you're saying it's the big banks. What are you saying you believe is about to happen?
I think they're running out of money. And when you have toxic assets protecting other toxic assets, you're going to see other banks do what Wells Fargo had to do, borrow more money, or else they will fold, right? This is the problem, and this is going to cause massive amounts of inflation, which is why Trump is trying to get Jerome Powell to stimulate the economy, and Jerome Powell won't. Why? Because whoever is in charge when the economy starts to fail and there's a banking crisis is going to get blamed for it. It's Jerome Powell's fault.
Fox News alert, the Ayatollah's gone into hiding. He's believed to be holed up inside an underground bunker northeast of the capital. Iranian proxies, which have been severely degraded, are threatening to commit acts of terror against American troops and American ships in the region.
And sources are telling ABC News that President Trump has approved the attack plans for Iran that were presented to him.
And American businesses are now bracing for cyber attacks. The whole world's watching.
In light of that news, I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks." That's a quote directly from the president for all of you today.
What's your take on that? Because people say, well, that's just the press secretary. No, that's Trump talking. Now it looks like he's given himself more breathing room, 2 weeks when we were coming down to the deadline. And the last deadline passed, obviously, and within 24 hours, Israel struck.
What Trump is saying, I believe, in that message is, I don't want to embroil America in a war for the next decade plus.
And that's what he's been saying in the last 48 hours, or really 24 is, I only want to do this if it doesn't turn into a long war. Now he's learning it will. And so sanity is prevailing. Wow, that's so important. People need to call and get a free consultation or go sign on the email. You guys are the best. You have the best prices selling it at wholesale. That's why you're top rated. Most other places are a scam. It's just true. Gold and silver is great, but not the way people sell numismatics and collectibles. It's a scam, folks. It goes from bad to worse. You're the place to go to. You can also roll over financial instruments. It's so easy, but people need to go to kepm.com/gold, 720-605-3900. And folks really need to take action now. The best investment there is. All I'm going to do is steer you right, folks, because I treat you like I want to be treated on the supplements, on the products, on the sponsors, only the best. And that's Kърк Elliët Precious Metals, kepm.com/gold, 720-605-3900. Call now for your free consultation.